if something happens within that duration, then she'll be okay. Right now, in regards to terms, she's going to pay for that on a monthly basis. If you guys had to take a guess, what would you say she would pay on a monthly basis for term insurance?
30 bucks a month is what it says.
All the answers are every last answer.
You get all the answers.
Are all on there. So, but on average, most people think that the price is going to be higher. $50, $60, $70, just depend on what they know about insurance.
That's what I was thinking when I came in as well. $100.
Yeah, so because she's young, and this is just at a standard health rating, not that she's super healthy, but because she's young, she can get a larger amount of life insurance for a lesser amount. So somewhere between $20 and $40 on average is what we saw. So we just took the middle number as $30, right? So that's term insurance, and then they have what's called ROP. ROP is a little bit different. Basically the same coverage, the $500,000 for the coverage. It lasts her 30 years.
Boys, can you turn it down, please? Thank you.
It lasts her 30 years, so it still expired at the age of 64. But once she hit the age of 64, what do you think happened to the money that she paid that whole time for the policy?
She gets a refund?
She does. Again, all the answers are the way already. Right?
You get it all back.
Yeah. So let's just
The
say
whole
she
thing?
$36,000.
$100 a month. Over the course of a year, that's $1,200. Over the course of 30 years, that's $36,000 that she paid into the policy. At the age of 64, she would get a full refund for everything she put into the policy. So that's $36,000. So easy way to think about it right now. I'm 40 as an example. I'm not 40, but I'm just giving you an example. I'm 40 years old. 30 years from now, I'm going to be 70. If I get this policy, when I turn 70, worst case scenario, I get all my money back.
Yeah.
If I do pass away, which I guess would be, actually that would be the worst case scenario. If I pass away, would be the worst case. If I pass away, my family or my beneficiaries, whoever I said, will receive the $500,000. But if I live, I'll get all my money back. Right? Now, there's no interest included with that, but at least, it
You
costs
get the money
nothing
back.
at the end.
Yeah.
Ultimately, it costs you nothing at the end. So, any questions on ROP, or is it pretty simple?
That makes sense.
Pretty simple. Pretty simple. And then we have what's called permanent insurance. Permanent insurance, if I can compare these to like vehicles, your term will be like a Toyota, right? Nothing wrong with a Toyota, gets you from point A to point B. All right. ROP will be like a BMW or a Lexus or something like that. And then your permanent insurance would be more like a Maserati or Ferrari out of the policies. Okay. Now, three main benefits that they have. Number one is what they call a death benefit. Death benefit is just the life insurance amount, $500,000, $600,000, $700,000, whatever your benefit is. But the key about that is that it's permanent. So when does it expire? Never. So it's only when you do. I guess technically, whenever that is, we just don't know when it's going to be. If I ever asked you guys, how long would you want your life insurance to last you, what would be the common answer you think?
Forever.
As long as I do. I don't, because I don't know when I'm going to go. I don't want to wait till 93 to find out, I don't have it, and in 94, something happens to me, right? So in this case, the policy is permanent. Number two is what they refer to as living benefits. So an easy way to explain living benefits, if I have a chronic illness or terminal illness or critical illness, they'll allow for me to utilize a portion of the policy while I'm still alive in order to offset my costs. So let's just say I have like a liver cancer or something like that. I'm just giving an example. They'll allow for me to use a portion of that $500,000. So it might be $300,000, $400,000, just depends on the company itself. But I can use that when I'm alive to pay bills today, so that way I can offset my expenses later and not incur so much cost. Or if I have a family member that's taking care of me because I am disabled, I can pay that family member a living wage so they don't miss out on their income. Because normally what happens is some family member would quit their job and not earn income and take care of whoever is sick or whoever is disabled. In this case, they can kind of have a backup plan to take care of that individual for themselves. Right? So that kind of helps. Right? And then number three is what they call cash value. Easy way to explain it, let's just say, I'll explain it differently. This lady here, she gets back $36,000 after the 30 years. Within a cash value, they'll get back the money plus interest, and it's all income tax free. She'll still have access to that policy later in life. It's not like it disappears on her because it's a permanent policy. Does it make sense so far?
Yep.
Right. So she might put away a different amount as opposed to being $30 or $100. It might be somewhere closer to $250. However, that'll kind of offset at the end because you're still receiving a lot of cash back from the policy. So that's a different option. So, any questions on that so far?
Nope. I want to know how he would be. How much it would be a month for him to get.
Which one? You want the regular sedan? You want the Lexus? Or you want the Ferrari?
The cheapest one.
The most
Four.
All right, yeah, that's
so,
good.
So what I'll do is I'll show you how we calculate how much life insurance is recommended for a family. Has anybody ever went through the details or the numbers with you to kind of give you an idea? No? Okay.
It's
Well,
not for a long time.
that'll be a fun little exercise. You have a notepad?
Yeah.
Take notes.
Yeah,
if you
yeah,
need
yeah.
to.